I see some old faces. Old names, I should say. Good work. Let's give it a couple of secs. Well, I'm going to call you Alberto, so good luck in your flight. Sorry, I can't pronounce the first name. Ephraim? Is it Ephraim? Thank you. Right, okay, let's get going. Let's get going. Plenty to get through as ever. Right, okay, non-farm payrolls, 4th of May. As ever, the usual disclaimer. Please read and understand that because I'm going to be talking about live market information throughout. I'm going to show that again at the end. So yeah, it'll be there for you at the end as well. Normal sitch, expectations, what are the drivers, key markets to watch, live market analysis. You know the score, hopefully by now. Right, okay, this payrolls report, I think on the surface of it, might be a little bit on consensus, might be a little bit sort of boring. However, I'm not so sure. I think it could be an interesting one. I think you might see a surprise in average hourly earnings jumping. General sentiment at the moment is definitely dollar positive. And you've seen that in the last sort of couple of weeks, really is pulling through dollar strength. What a run that is on the dollar index. Completely took a lot of the market out. Big stops, I reckon, taken out through the market. 121.50 on euro dollar, 137 figure area on cable. All these stops taken out. Really interesting, I think. Big moves. And we've had a bit of a consolidation from the Fed. Look at this, May FOMC. That was on Wednesday, and the market's just consolidated since then. The Fed took a little bit of, you could argue a little bit of a dovish move because it sort of used the word symmetrical, which would, in terms of what its expectations were of reaction to inflation going above target 2%. It sort of suggested that it was happy to let inflation go above target, which sort of took a little bit of the steam out of that dollar rally, didn't it, near term? But yeah, I don't know. I think today we might see a bit of a regeneration of that dollar rally, and I'll sort of talk you through why in a bit. Now, going into this payrolls report, we've got 95% probability of a rate hike in June. I mean, I've got 75% for a third one in September, and then fourth of 34% here. I mean, I've just checked it literally in the last 3 minutes, and it's now, I think, 70% for the third in September, and around about I think 40% for December. Let me just check it again. Is that right? Yeah, about 40% for a fourth in December. So you're sort of on the limit, on the cusp of 3 into 4, which is basically where the Fed left us in the March FOMC, where the dot plots were sort of on the brink of turning 3 into 4. But generally speaking, because we've got a 95% probability of a rate hike in June, this payrolls report is not going to change the immediate outlook for the next rate hike. So subsequently, it's not going to drive an immediate rate hike, if you understand what I mean. Even if you get a really strong payrolls report, or actually I should phrase it the other way, even if you get a really weak payrolls report, it's still going to be a rate hike in June. So it's not going to change the narrative on that. And subsequently, I think we're going to get a strong payrolls report with dollar positive, and it's also risk positive as well, because you want to see the US economy doing well, and picking up with a strong payrolls report suggests that the economy is doing well. So that's positive for risk appetite, I think, going forward. But again, I'll sort of talk you through in a minute. There are different grades of that and how it would go. But certainly, I think a strong payrolls report would be dollar positive and risk appetite positive. Conversely to that, a weak payrolls report would give that give those dollar traders a chance to take their profits. And I've got here support for dollar index 92 to 92.50. Show that again, which is sort of this 92.50, this sort of pivot from the November lows, January highs, sort of stabilized around that level in the last few days, isn't it? And I've put 92, get the crosshair, sort of a little bit of a near-term breakout as well. So the basis of support, I'd say 92 to 92.50. You could argue 91.75 as well from that old those old lows. But anyway, you've got a nice sort of consolidation on the dollar, and I think this consolidation is just coming in front of payrolls. Now, the focus today, average hourly earnings. I think that is going to be the key factor. The headline payrolls always sort of generates the initial move on the algo traders, but I think ultimately the average hourly earnings will be the big driver, and it's been the case for several months now, because ultimately inflation is the big focus this year. Will inflation pick up? Yes, inflation is starting to pick up. Let me show you. Where is it? Sorry, I've got to find stuff now. It's all over the shop. Right, this is my inflation chart for the US. Look at these indicators, all rising. Core PCE, this is the important one, this yellow one here. This is the Fed's preferred inflation gauge, and look at it, accelerating higher. CPI on the headline, accelerating higher. On the core, CPI headline, even higher. So this last one here, average hourly earnings, if that also starts to pick up and goes above 2.8 to 2.9 to 3%, that is really starting to play out this inflation story. Already we are seeing the inflation story picking up in the States, and that would really generate sort of some shakes in the market. And what we have seen at the moment are treasury yields. Where are they? Sorry, I just got to find all my charts. Treasury yields, which have just come off the top a touch in the last couple of weeks, certainly not helped by Wednesday's non-farm payrolls. 297.75 I saw that the 10-year was just before the announcement of the FOMC. So it's dropped 4 basis points since then, thereabouts. So obviously the treasury yields have just sort of taken a little bit of the steam out of that run, where treasuries have just started to sort of pick up a touch, pulling the yields lower. But what does this payrolls do today? I think average hourly earnings. Now, what are the expectations for? I've got down here in the chart down here, 192 for the headline, 2.7 for average hourly earnings, in line with last month, and 4% on unemployment. Now, 192. I mean, let's look at the non-farm payrolls last few months. Really all over the shop, isn't it? I mean, the average on a 6-month basis, the average is actually increasing to over 200,000 now. But look at that. I mean, last month was really weather hit, 103, and the month prior to that, 326, all over the shop. Basically, it's expected to be sort of pretty much in line, in the middle, around about 190, 200,000, 210,000. I don't think that's going to make too much difference to the market today, and it would be a rather sort of non-plus reaction to that. However, as I said, average hourly earnings picking up is the key, because that will be the final sort of piece in the jigsaw. Now, my thinking, looking at the survey data yesterday. Where am I? Sorry, I've just lost all my. There we go. Looking at the survey data yesterday from the ISM, survey questioners were sort of suggesting that input prices were really increasing. Not only that, look at this. The employment cost index in the US on last Friday picked up to 0.8% for the quarter. That suggests it's becoming the employment costs are increasing. So subsequent to that, I'm of the belief that I think we're going to see average hourly earnings picking up. And it would need 0.3% on the month to pick up to 2.8%, and that again would be I think the market would respond to that, because especially considering the expectation is 2.7. So I think that would be the driver today. Whoa, no, what's going on there? Okay, here we go. Right, so now in terms of, I've got here, consensus expects a fairly tepid report. So we've got 192,000 on the headline. We've got 2.7%, which is in line with last month on the average hourly earnings. Okay, that's fairly sort of middle of the road. But inflation, as I said, inflation indicators are building, and I think an upside surprise in average hourly earnings could easily be the big driver. That would pull yields higher and the dollar higher. and that could generate a strong payrolls report. And you've got here the different reactions. Sort of, it's fairly standard reactions, but I do tweak them a little bit. So a weak payrolls report, that would be a headline miss and also average hourly earnings dropping. Feb. Oh, I didn't tweet that bit, did I? 2.7%, less than 2.7% earnings growth. That would, as I said, that would be very much of a disappointment, especially considering what we've seen in the inflation data. So you've got inflation rising, and if you saw average hourly earnings dropping, that would not be good with it. That would not be a positive. So the dollar would certainly sell off on the back of that, but that's not what I think is going to happen. But in that scenario, you'd see dollar weakness because of the profit taking. So you'd see dollar weakness on the back of that. The yen would be the big gainer, the big outperformer, because it's a risk negative. That would be a risk negative payrolls report. So the yen on the currencies, the yen and the Swissy would be the big gainers. Aussie and Kiwi would be volatile and probably underperform because they are the higher risk currency options. In terms of commodities, gold, that would lift gold because gold and the dollar are inversely correlated to a degree. So gold would pick up. It's difficult to really assess how oil would do because oil has got bigger fish to fry in terms of production numbers and also the Iranian sanctions. Dollar has been a bit of a side performer on oil at the moment, so just sort of bear that in mind, but it could be higher oil. In terms of indices, risk negative, I think, would be a driver of markets lower. So strong payrolls report. I've only got 4 minutes here. Strong payrolls report. Dollar strength, renewed dollar strength. You'd see the dollar rising, and I think it could rise quite quickly. You've seen a push lower, on treasury yields today. Actually, around the day low, here you see the 10-year and the 2-year. So the 10-year is around the day low going into this payrolls report, 293. So I think that you would see that picking up, and that would help to drive that dollar renewed strength. Dollar would trend higher. Yen weakness. Dollar yen is a really strong mover. Tends to be a strong mover on payrolls report. So watch out for that. Kiwi and Aussie would be benefiting on the back of the stronger risk, but it depends on how strong we're talking. Because I think if, say for example, average hourly earnings zoomed higher, then that sounds great on one regard, but it also puts the pressure on the Fed to do a fourth rate hike, and the market would then start to factor that in. Maybe that would still see strong dollar move, definitely strong dollar move, but I mean, what that would do to risk appetite with the Fed arguably then being pushed into the need for a much stronger, a more aggressive monetary policy is, not sure about that. Gold negative on a strong payrolls report, that would be for certain, and I think that would drive gold to test 1300 and indices as well. It's difficult, but I think it would probably provide a strong move. Certainly in the European indices, I've got here on a weak payrolls report, DAX and FTSE weaker because euro and sterling would be stronger, and I think that would be the case in the opposite as well. So on a strong payrolls report. And finally, let's have a quick look. I always talk about this, the spikes. We have spikes every time you get the payrolls report, you get spikes. And it is something we need to consider when you're putting trades on, is the timing of the move. Just wait for the spikes to retrace. Last month, we had that really disappointing headline number. Subsequently, the market jumped dollar weakness. It then retraced that move because the average hourly earnings picked up. But that pickup in average hourly earnings didn't really do enough to really trend it, and subsequently we saw the dollar weakening on the back of it. So right, we've got less than a minute, so let me get myself set up here. I've been rambling a touch, haven't I? Sorry. Bang. Okay, let's not miss it. Right, so we've got here all the numbers here that we need to account for. When it comes out, I'm gonna have a quick comment, and then I'm gonna tweet a very quick tweet. So let's less than a minute now. 192,000 expected. Don't forget 2.8 on the 2.7 expected on the average hourly earnings. Right, where are we looking? Marcus, dollar strengthening a touch into it, interestingly. Right, come on. Right. 164, so slightly weaker. 2.6 on average hourly earnings. Okay, that's dollar weakness. It's missed headline and missed on average hourly earnings. You've got a move lower in the labour force participation rate. You've got average hourly earnings miss. Yeah, that's not great. So unemployment falling, which is presumably positive, but headline payrolls didn't. This is generally dollar negative, so there's going to be a move against the dollar. So rebound. How much of a dollar negative move? 135. So last month has been upwardly revised as well by about 30,000. I haven't got the previous month's revision prior to that, so if there has been another revision. But yeah, headline lower than expected, but an upward revision by 30,000. So I suppose you could argue net headline miss of 30 and an upward revision of last month 30. So net 0, arguably, but and that might have a bit of an impact there. But average hourly earnings 2.6 is the key takeaway here, and that is going to be a dollar negative. So right, I'm just going to tweet. I find that really surprising on average hourly earnings, by the way, considering all inflation and cost indices were pointing more positively. That is a real surprise. So 164. Upward. Crikey, I wish I could type. Upward revision of around 30. Generally, dollar negative. Right. Okay, so we've had an initial spike higher in lower in the dollar, and it's just unwound a touch. I think it's going to buzz around, but I think ultimately this is dollar negative. So you're not seeing a decisive move, just sort of 20 pips higher on cable. Euro barely really moving. Given the fact that all the other central banks have just been cowering into the corner on monetary tightening, I think this doesn't do a great deal potentially to change the story. You might see a bit of a dollar, bit of profit taking, but yeah, not a huge amount. Average hourly earnings is a disappointment, though, I have to say. That is a disappointment for me. U6 unemployment 7.8. I mean, that is again record lows. I mean, 3.9 on the unemployment rate is having been flat at 4% for 6 months. Unemployment still falling, but average hourly. I mean, because my point that I've always made is that unemployment is still falling, and U6 unemployment below 8% is effectively. Does that not tell you that there is still slack in the labour market? And average hourly earnings dropping sort of plays into that. Labour force participation rate falling, interestingly. I mean, I'm trying to work out what that actually means, but in terms of why that's also driven a decline in unemployment. That should have been the other way around, really. Yeah. But anyway, yeah, you do have a bit of a fuzzy move. Aussie dollar gaining slightly on the dollar weakness. The gold price $4 higher. Equity markets lower. So it's sort of playing out as a weak payrolls report. Equity markets lower. As I said, you've got those stronger currencies of euro, dollar moving higher. You've got cable moving stronger. So subsequently, you've got a little bit of a drop back in these equity markets. S&P 500 futures stable around that sort of around the sort of 0.4% lower. Yeah, gold 13.15. So, right, resistance on gold 13.15 to 13.18 initially. 13.25 is the key resistance near term. So it's up into resistance now on gold. Now let's have a look at what the initial move is on these charts. Day high on gold, which is fine, but you look at the fact that gold is up around the old breakdown of 13.15 and back to around sort of where it was early this morning. 13.18 was yesterday's high. So it's up towards resistance. If it starts moving above 13.18, I think you're looking at 13.25 perhaps. I don't necessarily think this is going to be a decisive trend move though. Let's look at euro dollar, which has crept higher. It's now starting to sort of break that trend a touch. But as I said in my morning reports, you're sort of basically just still at that downtrend, aren't you? And just looking at these momentum indicators, I think that the euro dollar is going to struggle to really gain traction upside, and I think rallies are going to be sold into. On cable, similar story, not really showing any real move. Still, basically flat on the day on cable. And you've got room to unwind to 36.55, which is around about where that downtrend is. You've got room to see that. So you've got a room for another 70 pips of upside. 75 pips of upside. Still within this downtrend, and it would be a fantastic selling opportunity probably, because you've got this overhead supply of 36.55 to 37.10. Dollar yen. Interesting, there has now been a downside break, but you've got the uptrend. I spoke about this uptrend on my morning report today. I said that the market is turning a little bit more corrective. Yen is strengthening. So we've got 50 pips up, 50 pips of down on the day on dollar yen. So this is strengthening yen, and it is testing this uptrend now. But these momentum indicators still remain pretty strong, and I think there's a decent band of support, 107.90 to 108.30. I think there's a decent band of support there, even if you did break that uptrend. So I wouldn't be getting too worked up about that quite yet. You've broken, as I said on gold, broken the downtrend, but the market is, again, 13.15 seems to be sort of limiting. Okay, so where have we moved on? Treasury yields, lows of falling away, 91. So you've lost a couple of basis points from 93.20 to 91.40, so just under 2 basis points of a slip on the 10-year, and the 2-year also rolling over. So yeah, it's not a great dollar payrolls report, certainly, and that is reflective in the fact that treasury yields are lower. But I don't necessarily think that this is a decisive one. Yeah, I mean, looking at these moves, you've already seen the dollar sort of roll and sort of regaining a little bit of poise. I think it's a bit of a choppy move. And just as I said, just as the dollar starts to strengthen and these currencies come off on the euro dollar on cable, we've started to see the DAX rebounding. Interestingly, DAX is rebounding. So let's get rid of that. So yeah, it really is sort of suggesting that I think that the dollar isn't sort of getting hit too badly. In fact, euro dollar is now sort of trading, but well, trading down on where it was earlier today. Cable, sorry, just prior to the announcement, cable has sold off. Dollar yen starting to rally. So yeah, I mean dollar yen hitting that trend line, didn't it? Dollar yen hitting that, bouncing off that trend line. That trend line comes in at 108.55, bouncing off that trend line. So that's an interesting move on dollar yen. So I don't necessarily think that the markets. I mean, I've talked about it every time. So we're 10 minutes after the announcement, and what have we seen? A retracement move. So you see the initial spike and then retracement. We have this every single month. Every single month. So I think ultimately what's going to happen is we're going to see the market sort of stabilizing a little bit. Maybe the dollar might drag a few gains as we've seen this sort of these markets drop away again on these forex majors. But I think you're not going to see much traction in this dollar in the dollar strength because of that average hourly earnings number. So be careful. Sort of trading a stronger dollar on the premise of this sort of unwinding dollar strength that we've had in the last couple of minutes. I'd say that the dollar is likely to sort of struggle to really gain too much before we start to see a bit of a move back in the direction of euro dollar higher, cable higher, dollar yen lower to maybe retest that trend line again. Aussie dollar rallying, gold back towards 13.15 again. As I said again, resistance at 13.15 to 13.18 on gold. Yeah, already we're starting to see this sort of stabilization from that initial spike back. So yeah, I don't see this as a real groundbreaker. I think the market has taken this as a bit of a disappointment, but not really something that's massively changed the picture. And yeah, I think it's a load of moves that don't really help, I suppose, the intraday trader at the moment. But it's interesting that we're starting to see that stabilization on euro dollar, on cable, consolidation around 108.80 on dollar yen, gold as well, holding up. Gold seems to be the gold and the yen, interestingly, seems to be a touch stronger again, and they are that is because of the fact that it's a slightly risk negative payrolls report. So subsequently, that the initial spikes have not retraced as much as, say, for example, euro dollar and cable, because euro dollar and cable are more sort of middle of the road in terms of risk appetite, whereas dollar yen falling away again and the gold price ticking higher again are more sort of risk off trades, which would suggest that there is a sort of a slight risk off bias to this payrolls report. So yeah, so not a great deal of movement around this payrolls report, unfortunately, at the moment. But I would expect euro dollar probably to regain some of the initiative to the upside, but nothing too decisive. So yeah, any questions? Yeah, just reiterating what I've just said from Mir, I think euro dollar will go higher soon. Euro dollar to 2060. Yeah, I mean on euro dollar, I think that 2090 is that old resistance, and you've got the 2090 to 2155. I mean, you might see a bit of a rebound. I mean, the RSI is sort of hovering around 30 now, but these other MACD lines and stochastics still remain pretty negatively configured. So I'm not sort of expecting euro dollar to be sort of shooting higher anytime soon. And I think this is more of a consolidation on euro dollar that may well break the downtrend. But yeah, I'm not expecting euro dollar to be shooting higher. I think there is more dollar strength to run. Yeah, basically 92.50, basically back at that pivot. So if dollar can sort of in due course, I think any weakness or near-term weakness, I think will be bought into on the dollar. So there you go. I think let's have a final look at where these markets are sitting. Yeah, it's just picking up slightly. Aussie dollar picking up slightly. Gold slightly on the dollar weakness. Dollar yen back down towards that uptrend again. Yeah, from John, I was expecting a whipsaw move, and that's what we achieved. I mean, yeah, it's not been a spectacular non-farm payrolls report, I grant you, but there you go. Some of them are, some of them aren't, and this seems to be a little bit of a bit of a drab move. But there you go. Right. Now I have been asked by my marketing team that basically they're going to be sending out an email. If you like and enjoy the webinars that I do and all the stuff that I'm writing, and you want to sort of receive notifications and stuff like that, we're going to send out for the GDPR thing for compliance reasons. We need to send out emails, and you need to click preferences, basically, apparently. So this is what we're going to be sending out, I think, next week. And so if you see an email, please say yes to it all, because that would be nice. I enjoy having all of you on my payrolls webinars. So yes, but follow me on Twitter and LinkedIn, got that, and yes, I will speak to you again soon for more payrolls trading. And here we see a slide of my disclaimer, but I can go one better than that. I can get a little video of it. Anyway, so I wish you good luck in your trading. Thank you very much, guys, and I will speak to you soon. More trading webinars next week.